Welcome to today's market report.
European stock markets are expected to open lower on Tuesday, weighed by losses in Asia amid COVID, geopolitical concerns and fresh Chinese regulatory fears. The DAX futures in Germany traded 0.5% lower, CAC 40 dropped 0.4%, FTSE 100 fell 0.4%. European markets received a weak handover from Asia, with the Hang Seng Index in Hong Kong dropping 1.8% after Chinese regulators issued a set of draft regulations for the internet sector on Tuesday, the latest move in a crackdown on the country's powerful tech companies. The directives seek to ban unfair competition while restricting the use of user data and resulted in a number of the important Hong Kong-listed internet stocks falling sharply. This follows Chinese economic data on Monday, pointing to a slowdown in growth at the region's main economic driver due to rising cases of the highly transmissible Delta COVID variant and the measures taken to contain it, while the turmoil in Afghanistan is also denting investors' confidence. Back in Europe, the UK employment situation picked up in July as the country reopened fully from the COVID-induced lockdowns. The claimant count dropped 7,800, while the unemployment rate fell to 4.7% in June. In the corporate sector, the retail sector is likely to be in focus on Tuesday, with US giants Home Depot and Walmart set to release their second quarter earnings before the market opens. Oil prices edged lower on Tuesday, struggling to find support after Monday's sharp losses on COVID-related fears for global demand. US crude futures traded 0.2% lower at $66.94 per barrel after dropping 1.7% on Monday, while the Brent contract fell 0.2% to $69.38 per barrel after falling 1.5% during the previous session. Gold futures rose 0.2% to $1,793.15 per ounce. On the FX front, the GBP-USD pair trends lower for the day at 137.41, down 0.75%. However, prices modestly up after hitting new lows for the week at 137.33. Market sentiment is in a risk-off mood. Afghanistan conflict keeps on weighing on sentiment, as well as China's highest regulations regarding internet companies. The UK's economy is improving. Earlier in the day, the ONS released unemployment rate, which was 0.1% lower than the expectations. In regards to the US docket, the retail sales numbers diminished to minus 1.1% versus a minus 0.3% forecasted by economists. Fed Chairman Powell will host a conversation at the Fed Town Hall in an online event. The moving averages of the cable are above the current market price, with the 50-day moving average in between the 100 and the 200 DMA, respectively. While the price crossed under the 200-day moving average, the pair could be heading towards lower prices. The price reached near 2nd of July's low around 137.31 and bounced back. RSI is 40.70 and remains slightly lower, while the average true range is 82 pips, slightly up. Eurodollar continues to push lower in the American session, extended the daily slide in the range of 117.27 to 30, losing 0.42% on a daily basis. The unabated US dollar strength on Tuesday is causing Eurodollar to continue to push lower. The risk-averse market mood seems to be providing a boost to the safe haven greenback following the mixed macroeconomic data releases from the US. Currently, the S&P 500 and Nasdaq indices are down 0.65% and 1.05% respectively. The dollar index is rising 0.44% at 93.01. The US Census Bureau reported on Tuesday that retail sales declined by 1.1% in July compared to the market expectations for a decrease of 0.2%. On a positive note, the Federal Reserve's monthly publication revealed that industrial production expanded by 0.9% in July. The data from the Euro area showed that the GDP in the second quarter grew by 2% on a quarterly basis as anticipated. The dollar advanced for a second straight session on Tuesday, boosted by safe haven demand as investors fretted about Afghanistan, a slowing Chinese economy and the rapid spread of the Delta variant. The New Zealand dollar, meanwhile, tumbled to its lowest in 3 weeks after the country identified its first COVID-19 case since February, prompting the government to announce new short-term lockdown measures. The Kiwi dollar was down 1.7% at 0.6904.
This is today's market news. Thanks for listening. We'll see you next time.